Hey, good morning, everybody. Today is Tuesday, November 17th, 2015. My name is Cliff Backus, and this is your push-button-stock-trading.com daily video market review. Stocks posted a bullish outside reversal yesterday, but volume was weak, showing a lack of bullish conviction on the part of institutional traders. This doesn't mean that institutions can't begin to develop conviction. New lows continued to outperform new highs by a wide margin. Large capitalization stocks outperformed small, although small are now outperforming on a 10-day moving average basis. Advancing stocks topped decliners by about a 5-2 margin on the New York Stock Exchange. Our market timing model on the NASDAQ is now on a don't buy signal, having recaptured its 200-day moving average yesterday. The S&P 500 remains on a sell signal. A sell signal indicates that aggressive traders should be completely off margin and can sell short. Everybody should sell any long position that, if sold at current stop levels, would result in a loss. All stops should be at their tightest levels on any remaining long positions. Conservative traders may want to hedge their portfolios with contra ETFs, exchange-traded funds. If you'd like help with contra ETF strategies, please give me a call. My contact information's on the home page. The O'Neill timing model, according to Investors Business Daily, is showing an uptrend under pressure with 6 distribution days on the S&P and 5 on the NASDAQ. Distribution, or higher volume selling in the market, is a sign of institutional selling, and too much distribution in a short period of time can be an indication that an uptrend is in trouble. Our timing models are giving us mixed bearish or certainly cautious signals. Be careful in this market. I wouldn't be in any hurry to buy or sell at this point. Keep your stops in place and at their tightest levels on all remaining long positions, and consider hedging portfolios with contra ETFs. As always, be sure to follow your written rule sets. If you'd like some help with portfolio management or with your written rule sets, please feel free to contact me. My contact information's on the home page. Let's start today by taking a quick look at the NASDAQ Composite. NASDAQ yesterday advanced 56.74 points, or 1.15%. We closed at 49.84, and significantly, we recaptured our 200-day moving average. We show the 200-day moving average in black right here. And you can see that we closed above that level yesterday, closing right at the high of the day, which is a bullish indication. Trading volume was below the prior day and was well below average, which should give the bulls pause. For you followers of William O'Neill, we are in an uptrend under pressure. The market went to a confirmed uptrend on October 2nd. Right now, we have 6 distribution days on the NASDAQ. NASDAQ right now is bracketed by support down here in the 4,900 area. And we'll call resistance this trend line. This trend line is our 2009 to August trend line. We broke below that trend line back here in August, and that's kind of worked as resistance ever since then. If we were to break through that level of resistance, our next area of primary resistance would be near the old high at 51.64. Our market timing model on the NASDAQ is on a don't buy signal. The don't buy signal indicates that we should have our stops in place. We should liquidate any position that, if stopped out, would result in a loss. And we should not be adding to long positions in our portfolios. Let's see what the S&P 500's up to. S&P yesterday was up 30.15 points, or just under 1.5%. We closed at 2053. Trading volume was below average and below the prior day. The S&P is in an uptrend under pressure with 6 distribution days in the past month. Right now, the S&P is bracketed by support here in the 2044 area, but that's pretty weak support. And so I would say that more aggressive support or more conservative support would be down here in the 1993 area. Resistance is going to be our 2009 to August trend line. The S&P is on a sell signal right now. Notice how the S&P is still trading below its 200-day moving average, which we show in black right here. And because we're below our 200-day moving average, our 10-day simple moving average is trading lower. Our 21-day exponential moving average is lower than 2 days prior, and the S&P hasn't recaptured its upper envelope, which is 1% above its 21-day exponential moving average. We're still on a sell signal on the S&P. A sell signal indicates that aggressive traders should be completely off of margin and can sell short. Everyone else should sell any long position that, if sold at the current stop levels, would result in a loss. All stops should be at their tightest levels on any remaining long positions. Conservative traders may want to hedge their portfolios with contra ETFs. It's worth noting that the S&P is on a sell signal. The NASDAQ right now is on a don't buy signal. Pick your poison. That's about all I have for today. If you want to talk about any of the stocks mentioned today or any of our market strategies, please feel free to give me a call. Drop me an email or make an appointment. Come by the office, see what we're up to. Contact information is on the home page. Please take a minute to go to our subscription page and subscribe to Push Button Stock Trading. You can also follow us on Twitter at PushButtonStock. Again, my name is Cliff Backus. That's your daily video market review. Have a safe and profitable day. Keep your stops in place, and I will see you again tomorrow. Please stay tuned for our important disclaimers. All the best. Disclaimers. Push Button Stock Trading Video Market Review is produced and edited by Clifford B. Backus. Mr. Backus is a Senior Vice President of Investments, Technical Analyst, Portfolio Manager, and Partner with the investment firm of Ohannes & LaCours Incorporated. Video Market Review is produced solely for the benefit of our clients, friends, and colleagues. Anything written, stolen, and/or plagiarized in this publication is done without malice. Further, the analysis and opinions expressed in this publication are strictly those of the editor and not of Ohannes & LaCours Incorporated, its affiliates, subsidiaries, or any of the officers or employees of Ohannes & LaCours, Inc. On that note, we submit the following. The analysis, calculations, and evaluations presented herein are based on data and assumptions Ohannes & LaCours Incorporated believes to be accurate. Ohannes & LaCours Incorporated makes no representation that such analysis or calculations are accurate or that such valuations represent levels at which actual trades may occur. This report has been prepared from original sources, except where otherwise noted, and data we believe to be reliable. Ohannes & LaCours, Inc., its affiliates and subsidiaries, and/or their officers and employees or their families may from time to time acquire, hold, or sell a position in the securities mentioned herein. Moreover, opinions may differ from one entity to the next. If we are used in connection with the purchase or sale of any security discussed in this report, we may act as principal for our own account or as agent for both the buyer and the seller. Push Button Stock Trading is dedicated to the education of friends, clients, and paid subscribers. Push Button Stock Trading is an information service only. The information provided herein is not to be construed as an offer to buy or sell stocks of any kind. Push Button Stock Trading is created to aid subscribers in making informed investment decisions based wholly or in part on technical analysis. It's possible that at this time or some subsequent date, the editors of Push Button Stock Trading may own, buy, or sell the investments presented. All investors should consult a qualified professional before making any investment. The information provided has been obtained from sources deemed to be reliable, but it is not guaranteed as to the accuracy or completeness. The editors of Push Button Stock Trading make every effort to provide timely information to subscribers, but cannot guarantee specific delivery times due to factors beyond our control.